Hello and thank you for tuning in to Dukascopy TV. Today I'm joined by Davies Senior Economist and FX strategist at Commerzbank in Singapore to discuss the performance of Asian currencies. First of all, Ashley, let's focus on the renminbi. Investors are becoming increasingly bitter about this currency and are now betting that it will fall against the dollar over the next few months. How do you feel about the Chinese currency?
China is probably suffering from peak uncertainty at this point. So we've seen yesterday, for example, industrial profits data showing profits for Chinese enterprises declining in year-on-year terms, and the PMI, the flash PMI last week deteriorated significantly for the latest month. So all of these suggest that China is slowing considerably, but at the same time, the Chinese government is responding by fast-tracking approval of projects, loosening monetary policy, the various local government stimulus projects. These take a couple of months for them to have an effect, and once they do, growth will stabilize, and I think that effect will help shore up the renminbi again. So for now, I would suggest sideways trading to maybe slight upside for dollar renminbi, that is slight weakness in CNY against the US dollar. But once certainty returns with regards to the Chinese economic outlook, I think the usual pressures on the currency to appreciate will return.
Now moving on to the yen. What are the major upcoming macroeconomic events that may affect the yen?
I think at this point it's probably just the broader US dollar outlook. So we have a number of major events coming up. We've got Fed Chairman Bernanke speaking at the symposium at Jackson Hole on Friday, which is typically a major signaling event for monetary policy. And of course, you got the FOMC decision in mid-September, where a number of participants are expecting some sort of additional monetary easing. We think they'll be disappointed on that front in terms of the extent of easing, and that could boost the dollar, including driving Doireann higher as well.
And Ashley, how do you feel about Singapore's economy, and how is the US dollar against the Singapore dollar performing?
Singapore dollar has been weakening in recent times. This is in part just a broader Asian currency move, but specifically for Singapore, it's a very small open economy. The external sector is deteriorating, exports are falling, and the domestic economy in Singapore has been moderating as well. Retail sales has been soft, inflation is coming off considerably, and all of these factors suggest that the Monetary Authority of Singapore, the central bank here, will be less hawkish or more dovish at the upcoming meeting in October. So at that meeting we would expect them to rather than guide a stronger currency, they will return to a neutral bias, which in the Singapore context means that the Singapore dollar will at least be stable against trade-weighted currencies or weaker. So Singapore dollar will probably underperform other Asian currencies over the coming months. Okay,
now let's look at the Hong Kong dollar. What is your outlook for this currency?
For the Hong Kong dollar, well, it's pegged against the US dollar. Periodically you see speculation as to whether Hong Kong will abandon that peg, but usually that occurs during periods of high inflation and strong growth. At this point, with China slowing, inflation falling across the region, including in Hong Kong, pressures on the peg are diminishing. And more structurally, we don't think Hong Kong will change their currency architecture until China opens up its capital account, which is still a long way away. So the Hong Kong dollar peg will remain, I think, for a number of years yet.
And finally, what other Asian currencies are particularly interesting right now?
Well, there are pockets of strength in Asia. So while the broader story is one of slowing China and weakening external demand, if you look in Southeast Asia, there's been surprisingly strong GDP outcomes for Malaysia, Thailand, Indonesia, and also the Philippines. And these economies have been boosted by strong domestic demand. A currency that I do like on a relative basis is the Malaysian ringgit. In Malaysia, we have a government election due early next year, and so typically ahead of election, as with many countries, you'll tend to see more government spending, and this tends to boost domestic demand. So the latest Q2 GDP data for Malaysia was very strong, stronger than expectations. So the way that I would express this view is to consider selling the Singapore dollar against the Malaysian ringgit, and that way you can avoid the US dollar and just play, for a sort of a contrasting trade among Asian currencies. That pair has been coming off in recent weeks, and I would expect it to continue over the coming weeks as well.
Thank you, Ashley. Stay tuned to Dukascopy TV to keep updated with the latest Forex news. Goodbye.